Hello everyone, welcome to the channel where we provide that financial education and information for you. Now today's video we're going to talk about why life insurance is not an investment. Okay, it's not an investment. Some people get confused with life insurance and they're comparing it with their mutual funds and their investment in the stock market, and sometimes on social media I'm talking to people and they're like, oh, I could do better than that. I don't have to wait 5 years for my money to grow or whatever. And they're omitting the fact that you have to pay for a death benefit with life insurance. And if you die, the insurance company have to pay up some money. You know, like that's not the same as an investment. But so I have to make it clear to people that you don't want to compare life insurance with an investment. If you're going to compare it with anything, you should compare it with a bank. And I'm going to explain those reasons in a second. But the first thing I want to differentiate is that an investment has two things that life insurance don't have. An investment has risk and you pay taxes. You pay taxes on your gain. Now, if you know anything about life insurance, you know it's the safest vehicle out there. Even safer than your bank, okay? You might want to check that out. But safest, you know, even through depressions and recessions, life insurance companies are the strongest, even when banks fail. So they have, you know, you're not going to lose your money. You can grow your money there, even at a guarantee. If you have a whole life policy, you can grow your money there, a guarantee. So you're not going to lose anything. So life insurance doesn't have that risk that the stock market has. You can have $1 million in there, and then you know, in a crash, you know, it drops 400,000. You have 600,000. Then you got to fight your way back to keep going. So life insurance doesn't have risk, and it gives your money uninterrupted growth. It's not going down and back up and going down and back up. With an investment, that comes with risk. So life insurance has no risk. The other thing is taxes. With taxes, life insurance is no tax as long as you follow the IRS guidelines. Follow the rules, all right? As long as you follow the rules, you pay no taxes in life insurance. So because of those reasons, you don't want to compare life insurance with investments, all right? No taxes. Now, there's three sections of the IRS code that makes life insurance tax-free, and as long as you follow the guidelines, you're going to grow your money tax-free, access your money tax-free, and you're going to transfer your money to your heirs tax-free. And the rules are, the section are 72E, 7702, and 101A. Okay. Now, if you go and read up on this, it might be very confusing. Whenever they make these laws, whether it's consumer laws or whatever, it's always so complicated for the average person to understand. I think they do that on purpose. All right, so it's a lot of times it's hard for me to understand as well. But here's what you need to know about each of them. All right, 72E allows you to grow your money tax-free. So you can accumulate your money tax-free because of 77E. 7702 allows you to access your money tax-free. And you can access your money tax-free through policy loans instead of withdrawals. Withdrawals do come with taxes, so don't do withdrawals. Remember, follow the rules and guidelines. Do loans. So if you do loans, loans are not taxable, okay? Loans are not taxable. So make sure you're doing loans. So 7702 allows you to access your money tax-free, and 101A allows you to transfer. Allows you to transfer your money tax-free. So that's all it is. 72E, grow your money tax-free. 7702, access your money tax-free. 101A, transfer your money tax-free. That's it. That's basically why. So that's why life insurance in the IRS code is no loophole. is the IRS code that allows you to do this. And by the way, the people who makes the laws also have life insurance, and they utilize these laws, all right? Remember, remember, politicians go into politics so they can have influence over the laws, all right? That's a different story, though. So, remember I said I was going to cover with you why an insurance company is to be compared with a bank instead of an investment. So, with a bank account, you have your checking, which is where you pay your bills from, right? Typically speaking. And savings account. Save money there, grow money there, keep money safe there, so forth and so on. Insurance companies have the same thing, right? When you pay your premium, premium is the money you pay, you put into the policy, right? And in a cash value life insurance, I'm not talking about term here, I'm talking in a cash value life insurance, when you pay your premium, it goes into two buckets. So I'm going to attempt to draw a bucket. Please don't judge me here. I'm not an artist. I can't draw, so don't judge me. So this is bucket one over here, and this is going to be like a checking account. So when you pay your premium, it goes into two buckets. Okay? Bucket one is where you pay for the policy. So you're paying your bills. So that's like your checking account here. All right? So you're paying for the policy. So to get life insurance, to pay the company for managing the policy, those type of fees, any fees and expenses, bucket one. Bucket two is going to be your savings account. That's where your cash value goes. Cash value goes into your savings account. And that eventually is going to be a combination of premiums that you pay, okay, plus interest. Right? So as that grows, it's going to grow more and more because you keep paying premium in there, and you're on top of your premium, you're gaining interest on the money that's grown there. So that's why. So you can compare a life insurance, cash value life insurance policy like a bank. That's why people say be your own bank, become your own bank, private banking, all that, because it functions the same way. Okay? You have your premium bucket over here. One pays the bills, one goes into your savings account, and your savings account is growing. But the difference is this savings account pay you less than 1%. And this savings account pay you 4% and up, right? Depending on what type of policy you have and what company you're with. So hope that makes sense to you guys. Hope the information was valuable. As always, if you do like the video, make sure to click the like button and tell me that you like the video, so I know that I'm putting out the right content for you, right? And if you have a question, make sure you ask the question, place a comment, what have you, and share it with a friend that you believe need to know this type of information. And if you haven't already done so, subscribe to the channel and hit the notification bell, so whenever I post a video, you're one of the first to be notified. And if you wanted to know more about this and you want to schedule a consultation, I'll leave the link below for you so you can schedule a consultation, or if you just want to ask a question, feel free to do so. Until next time, see you guys soon.